Uh, it's my first time that I am here, so let me first of all express my gratitude to the President Vlahovic, the Governor Madam Radovic for inviting us. And I can just say that it is very well aligned, the topic of the conference of price stability and financial stability and banking system stability. And what I can see, we have quite similar situations in the Western Balkans. But one thing that probably I have to, by listening to other esteemed colleagues, governors and vice governors, in order not to repeat, let me say that something that reminds me was how important it is to be together the entire region, but as well the policymakers, tax authorities, Ministry of Finances, with the central bankers. So what we see, we have a challenge when no one alone can resolve. Number one. Number two, the harmonization and let's say the level of communication is key on this. So even though the central bank independence is a foundation, the communication and alignment with authorities is needed. And we cannot think that we are isolated and we can only alone resolve the issues. It is, to me, very relevant and well noted the fact that this topic is discussed together with the ministers of finance and tax authorities as well. So it was, as explained by the governor of North Macedonia, this was a very complex issue, but it was probably the first time that this kind of alignment and this kind of common attitude was shown as well. So as I am one of the newest governors on the region, I can as well admit that I am really happy to see how much support we provide to each other. So it is a kind of a feeling that you are not alone. You have enough people to talk with and to share experiences with. Even though it is a general challenge to all, it seems that there are some specifics that each country has. So sharing those with each other, especially what works and what doesn't work, it is a very good example. So let me say thank you very much for all organizers and as well for bringing this high level and very professional conference together here. As it was said, the inflation has surged to levels that have been seen in the past in many countries. And I cannot see this disconnected from the movements or kind of, let's say, crisis and the challenges that we had throughout 4 or 5 years. So it came from strong recovery of demand after the pandemic, COVID-19, supply chain disruptions, commodity prices increases, and of course, exacerbated by the Russian war in Ukraine. So when we speak about the problem that we have, it's all about the origins and the way how we can handle it. So the global energy and food prices were the one to affect mostly, and we as a country, Kosovo, very much dependent on imports. We have been, of course, importing the inflation. So we ended the year by 4.9% inflation, coming from 11.6% a year before, so 22, 11.6, 23, 4.9%, but 3.7 each base point was contributed from the imports of goods and services. Only 1.2% was contributed domestically. So as we understand from where it comes, so it is easier then to when you have diagnosis to tackle that. As Euroized economy, as Montenegro is, we have very limited tools to intervene. But of course, we have been following very closely, and we had to make sure that through regulation and very prudent policies, we had to make sure that the banking sector and financial sectors remain strong and is able to respond. What we can proudly say, I think, as an entire region, is that we have been resistant and resilient to many shocks that we had for in a very short term. So it's like an earthquake. If that earthquake is repeated several times, most probably the building will fall. But that is not repeated, it has different magnitude. So unfortunately, we have been hit different times. And what we have understood, we have the systems which are already built to resist. But of course, we have to work more now on, let's say, an early warning exercises and recalibrating our models to make sure that we predict more what is coming and we have enough time to recover. We enjoy good support as well from international financial institutions. In this case, IMF is here present, Mr. Souza, and we try to align as well at maximum we can with their expertise. And since IMF and the World Bank and other partners that are working with us have the global knowledge and information, we try to as well make sure that we understand what is happening, and especially as we are a small but very open and integrated economy, we know that we are very much exposed as well from the movements that are. Our largest diaspora is in European Union, so in Germany, Switzerland, Austria. They are contributing with remittances more than 10% of our GDP. Approximately 40% is the direct and indirect contribution of diaspora on our economy. So if there are any issue there, we know that it's 6 months maximum the cycle, then we will start being hit. And that's why, this is, not always a good, of course. It has some constraints. So another thing that we have not to forget is about the structural issues in the economies. It should not be expected from us as the central banks to resolve those by tools that the central bank has. So if we have a crisis, we have, of course, deal with crisis, but we cannot think that by solving the crisis we are resolving or reshaping the economy structure, because it's not possible. So that's why I see key cooperating with authorities, of course, by respecting the independence of each other, but working hard together, trying to align and not kill each other's measures. So I can just recall now when I was in another capacity on Treasury. As a treasurer, during the pandemic, we had to have some stimulus and fiscal stimulus and somehow boost the economy, but on the other side, the central bank had to do their own role. So just a small example, through the Credit Guarantee Fund, we have been issuing stimulus to the businesses. The coverage from 50% was increased to 80%. But on the other hand, the central bank was offering moratorio to the loans, rescheduling those loans without a high implication on the, on the loan loss provisioning. So if one side someone is trying to boost and other side you are stopping, it has no sense. So that's why being prudent and having a coordinated policy would be a right approach. So I think we have shown that we have been at least well aligned to work on those issues. So of course we are following what the ECB is communicating, but as well deciding, Fed as well, because as the world economy is connected and we are dependent, as I told, from import, that is of course the way how we work. We expect that the inflation will go to 2.5% on end of this year. And by end of April, it was 2.1%. So we expect that from 4.9 in average year, we go 2.5. And we believe that next year, somehow at this time, we would be in a position to say that we believe that we came to a new normality, which of course for some, especially for core inflation and some basic like food and some other, of course, we know that it's going to be the same level. One characteristic of the banking sector, and I'm going to close the first remark, is we have a foreign-dominated banking sector. 83% of our banking system belongs to internationally owned, and out of which half of that is European Union banks. So of course the rates which have been in euro has been, of course, be exposed to us, and approximately 30% of our loan portfolio is floating rate. So it's not a fix. It means that it is combined with a Euribor. So that has had some implications, of course, in our case. But I can say that our banking system is really strong, is resilient, has been performing well. Our NPL ratio is at lowest in the region. It is less than 2%, 1.9%. And the credit growth is like 15%, so double digit. And compared to the time of pandemic was 7%. So like the colleagues governor were mentioning, it was already, let's say, divided by 2. So the speed of the growth was, of course, one issue. But of course, we have to be careful about the future, about how we see to progress. We see somehow now a demand on a funding side, because majority of our lending is coming from deposit base, so it's domestically driven. But that, of course, would bring some pressure on liquidity. So we would like to see continuously to make sure that we have prudent policies, which are, of course, promoting macro-financial stability in the country. We are now revising the law on banks, and we are doing some other reforms. And I'm glad to say that we have a strong support from IMF on the reforms that we are undertaking. So to conclude at the first part, we do not see for the moment any need to take any measure or, somehow interfere. But of course, we are closely following, and we believe that, as it was said, the last miles might be short on the kilometers, but always they are difficult because you lose the energy quite much. So then that will not necessarily be the equivalent amount of energy needed to come to the end. And then, as fragile economies, we always have to deal with something. So we would be, I believe, for years dealing and busy with, trying to address issues which are pressing issues and coming to our national economies. Thank you very much.